The crypto market is in free fall. Bitcoin is down over 20% from its peak, ETF investors are fleeing, security breaches are shaking confidence, and global markets are on edge. Is this the end of the bull market, or just the beginning of something bigger? If you think this crash is about one thing, you're missing the full picture, because right now, a perfect storm of events is hitting crypto all at once. The chaos behind the crash. It's easy to point to a single event and say, that's why crypto is down, but this time, it's a cascade of events, each adding more uncertainty to the market. First, ETF outflows. Bitcoin ETFs were supposed to be the next big thing, bringing in institutional money and fueling a long bull run. But that's not how it played out. Over $3 billion has been pulled from Bitcoin ETFs in just the last week. Why? Because many ETF investors don't care about Bitcoin's long-term potential. They're in it for the profits. When the market turns, they sell first, think later, and that's exactly what has been happening these days. Then major security breaches. Confidence in the crypto market took a massive hit after hackers stole $1.5 billion in Ethereum from the Bybit exchange. The attack, reportedly linked to North Korean-backed cybercriminals, sent shockwaves through the space. Every time a major hack happens, fear spreads, and retail investors panic. This isn't just a one-time event. Security risks are still one of crypto's biggest weaknesses. We're preparing a video breaking down how the Bybit hack happened, as it was a fascinating sequence of events that you should definitely be aware of. Make sure to subscribe to the channel so you don't miss it. At the same time, we saw another speculative bubble pop, this time with meme coins. The official Trump and Melania coins skyrocketed, bringing in a flood of gamblers looking for quick profits. But just as fast as they went up, they crashed. And when that happens, it hurts confidence in the entire market. You know that, right? And that brings us to the regulatory uncertainty. One of the biggest sources of uncertainty right now is regulation, and it's coming straight from the top. On January 23, 2025, President Trump signed an executive order stating that a federal regulatory framework for digital assets will be established within 180 days. What does that mean? No one knows yet. It could be pro-crypto, it could be restrictive, and again, that uncertainty alone is enough to shake the market. At the same time, Trump has also scheduled a high-profile crypto summit for March 7th, 2025. This event will bring together top crypto founders, CEOs, investors, and government officials to discuss policy. It could signal the start of a more structured approach to crypto regulation, but until we know what that looks like, investors are being cautious. Right now, the crypto industry is in limbo, waiting to see whether the US government will take a hands-off approach, as they promised, or tighten control. And in a market that hates uncertainty, that hesitation is showing up in prices. And I bet you have heard a bit about the gold liquidity crisis that we are experiencing right now. As if all of that wasn't enough, the London gold market is in trouble, and it's sending signals that could be affecting crypto as well. Delivery delays and supply constraints in London's bullion market have sparked speculation that the US is rushing to acquire gold in anticipation of a major financial crisis. Some analysts believe this scramble for gold suggests that governments and central banks are preparing for economic instability, possibly related to inflation, sovereign debt concerns, or shifts in global trade dynamics. With gold holding near all-time highs, investors are paying attention. Historically, when uncertainty rises, people flock to gold, the ultimate safe haven asset, and that rush may be pulling attention away from Bitcoin and other risk assets. For some investors, this isn't the time for speculation. It's time for security. But is this the end of the bull market? That is the big question. Is the bull market over, or is this just a correction before another leg up? Let's look at the data. Bitcoin's drop is big, but not unprecedented. Bitcoin has fallen over 20% from its peak, technically entering bear market territory. But in past bull runs, 30 to 40% corrections happened multiple times before hitting new highs. If this follows the pattern of 2017 or 2021, this could be just another shakeout before a bigger move. Fear and Greed Index. The Crypto Fear and Greed Index recently plunged to a score of 10 out of 100, signaling extreme fear in the market. Historically, such low levels of the index have often been followed by significant market recoveries. For instance, in 2022, the index reached similar extreme fear levels, after which Bitcoin began a slow recovery. Additionally, past instances have shown that recovery from extreme fear to greed has usually taken less than 2 months, with each recovery leading to new all-time highs. While past performance doesn't guarantee future results, these patterns suggest that periods of extreme fear can present potential buying opportunities. Short-term pain, long-term gain. Arthur Hayes, former BitMEX CEO, believes Bitcoin could drop 30% before rebounding hard, so for him, it will continue going down even more. Why? Because central banks are pulling money out of the system by reducing their balance sheets and tightening monetary policy. This means they are selling assets, letting bonds mature without reinvesting, and keeping interest rates high, all of which reduce the amount of available capital in the market. Less liquidity means less money flowing into risk assets like Bitcoin, leading to sell-offs and lower prices. But once the Fed and other central banks are forced to inject money back in, Bitcoin could explode upwards. Key support levels to watch. The 200-day moving average is also a crucial indicator. If Bitcoin stays above it, the bull market is still intact. If it breaks below and fails to recover, we could see a longer bearish phase. So, how long will the market be down? No one can predict the exact bottom, but here's what we do know. The market is watching the $70,000 support level. If Bitcoin holds above it, a recovery could happen faster than people expect. If ETF outflows stop, demand could return quickly. Big money left fast, but it can come back just as quickly. Macroeconomic factors are key. If the Fed signals a shift toward easing policy, Bitcoin and risk assets will likely surge again. Trump's March 7th summit could be a turning point. If it signals a positive regulatory approach, it could restore confidence in the market. Right now, we're in a high uncertainty period. This doesn't mean the bull market is over. It means the next few weeks will be critical. This crypto crash isn't about one thing, it's about everything happening at once. ETF outflows, meme coin collapses, security breaches, regulatory shifts, macroeconomic uncertainty. They all add up. But Bitcoin has survived worse. If you've been in crypto long enough, you know these shakeouts happen before major moves. The real question is, who's going to panic? And who's going to position themselves for what comes next? Let me know what you think in the comments. Are we near the bottom, or is there more pain ahead? And as always, stay curious and stay hodling.